we've got this AI thing here that's not going to go away. It's going to change, how everything operates. And what's the next thing? What's the next tech thing? Biometrics, chip in the wrist, things like that. And it is my belief that humanity is going to dramatically reject it.
Welcome to Y'all Street. Today I speak with Tony Greer, the founder of TG Macro.
He's the mechanic of the machine that smashes.
100% legit.
So Chris, you want a cup of coffee?
I just want to be the best.
Thanks, brother. Thank you, sir.
Tony, Evan, you want a cup of coffee?
I'd love one.
Look, I got you this anchor for the
Dude,
Navigator.
How did you know I'm a nautical fan like this? Thank you so
Coffee,
much.
cheers.
I have an anchor tattoo on my arm.
There we go.
I'm a fan of the anchor. Thank you very much, Tarek.
So we're here in Nashville at your inaugural TG Macro conference with just an all-star lineup of speakers. Tell me how this came about.
How did it come about? Well, it started off, I was about to have a local conference, and just try to do a small scale thing, 2019, what year was COVID, the shutdown?
2020?
20, okay, so sorry, I missed it by a year. But it was supposed to be 2020, and COVID wiped it out. But I was gonna do a small scale in my hometown. There's a great hotel on the water. And I was like, all right, I'm just gonna throw it here. I got Shannon to come out, here's the organization, this'll happen. If we get 50, 60 people, whatever. I just want to do a gathering and start it. COVID blew us out of the water. And then I was like, I come to Nashville quite often. And my manager, Mohit, is like, we got to rekindle this conference thing, and I'm very busy just trading markets, writing newsletters and doing the whole thing. And I was like, you know what, you're right. Let's get back on this. And it's perfect for the 10-year anniversary of my firm. Like, I founded it in 2016. So this is 10-year anniversary and the beginning of like the next leg of, I want to be able to do 10 of these in a row. Because I truly believe what Elon Musk says about live events being like actual luxury items. My whole life, I've been a road trip, concert, sport event aficionado, pursuer, So I was like, yeah, let's put it on the tape. And I literally jotted down, I was like, all right, who would I have speak at this? Boom, 1, 2, 3, 4, 5, 6, 7, 8 people. I'm like, all right, let's start at the top, start making phone calls. Yes. And when I got 6 people say yes, I was like, oh my God, we have to do this like right now.
So we had Doomberg, Brent Johnson,
Jared
Dillian, John Johnson, Grant Williams.
And Cuppy.
I mean, just solid.
They were so great. And the thing that was cool was that they presented different views, right? That was different, totally accountable views. Some of them totally in the opposite direction, but
which is great.
Yeah.
Which is great for conversation
Totally.
and analysis.
Yeah, it gives people something to lean on either way, right? You like to be able to understand why you think somebody's wrong if you're the other side. And if you can't figure out why, then you challenge your own idea, So that was great. And just the powerhouse of those 6 different angles really tweaked people's brains. Because the feedback that I got last night was like, dude, that was an unbelievable roster. Like, holy smokes. Like,
it reminds me so much. We were talking last night about John Malden's SIC conference.
Yeah.
He used to put that on every year, and there were like 700-800 people there. The
Yeah.
lineup was phenomenal, and then
Yeah.
they stopped doing it during COVID and made it remote. And I feel like there's been a real gap in these type of conferences. So I'm hoping that this TG Macro conference becomes like the SIC conference.
That's what we're trying to do,
There's a lot
man.
of demand for it. And I was actually pretty shocked with the turnout here today. I was thinking, maybe there would be 100 people at the conference. It was a packed house, coming from all over the country. So congratulations.
The world.
All over the world. There you go.
I was saying hi to a group of 4 guys having lunch out there. One is from the UK, one's from South Africa, and the other is from the Netherlands. And I'm like, you guys came just for this? And they're like, how could we miss this?
It's fantastic.
Yeah, I'm just blown away. It's why Nashville is a good spot to do it. People don't hesitate to come here, and it's fun as hell. So when we're done, we can go out and listen to some music.
That's what we were saying last night. I hadn't been in Nashville in maybe 20 years,
Which
and
is crazy.
we were walking down the street. I'm like, this place is amazing.
It's
Look at all the
amazing.
country music.
It's amazing. It's such a bull market city. It literally
Totally.
feels like New York in 1992 when I moved in there.
Yep.
Like, it is booming everywhere. I've been coming here for 7 years. and there was nothing on this block downtown, and now Amazon has their headquarters built there, taking up the whole entire block in a skyscraper.
Yeah.
It's that kind of progress.
And the AT&T building looks like Mordor,
Yeah,
right?
yeah,
Like
yeah,
the
yeah.
Eye of
Right,
Sauron.
the old, the old castle.
Right.
That's so funny, man.
Speaking of navigation, let's kind of navigate through your history.
Okay.
How did we get to this point? So you're from Long Island, New York.
Yes.
Just kind of take us through your journey to really 10 years ago when you launched this
Sure.
newsletter.
All right. So, I mean, you know where I have to start? At the dinner table when I was a kid. My dad was a Wall Street trader. He traded over-the-counter stocks for 30 years at Dean Witter Reynolds, and was a managing director for Morgan Stanley when he retired after Dean Witter bought them. So I had bids and offers in my blood. I remember the day my dad got assigned Microsoft, new IPO on his pad. You know what I mean? So these were conversations that we were having at the dinner table in junior high school.
And what was he saying to you? Give me an
know,
example of those conversations.
Making and losing money very quickly. Either
The
way,
psychology
some
of
days
it.
good, some days bad. But what I loved about it was that it was a competition. It was, that I picked up. And what I also picked up was that he came home from work every day after a 1-hour commute with the biggest smile on his face that you've ever seen.
Could you tell when he had a good or a bad day? Or
Oh,
was he always...
yeah. You could. He was, the thing was that good days were exciting and bad days part of the job. It was like shrug it off. You got to come back and report the next day. But what my dad had going for him was that he wasn't he was a street smart kid and not like a properly educated kid. You know what I mean? He only had a 2-year degree. What is it called again? Associate.
Associate.
Is that what it is?
Yeah,
So,
associate.
so that's it. So he didn't go to like a formal college and
Yeah.
wound up getting a job, getting hired on Wall Street from it being parking cars. That's literally how he started. So I didn't mean to spend too much time on that, but that's where my DNA is. So to make the longer story a little bit shorter, I started at Sumitomo Bank at a college and the World Trade Center in the North Tower of the World Trade Center, which was cool as an FX trader.
with Bruce Willis.
Yeah, right. I cut my teeth there, learned a lot about the markets, got a great opportunity at UBS to go over and trade spot FX. I went over and did that. I was doing a good job for them. They sent me to Zurich to their treasury department to trade precious metals, and that was where my first exposure to that was. From there, I got poached to Goldman Sachs. I was doing a lot of business with them. I got to know traders there. Guys were like, you should come here and work with us. We'll find a spot for you on the desk. And I wound up on the commodities desk there. Had a great 6-year run. I was investing in tech stocks before the dot-com boom bubble burst.
So let's pause there just for a quick second because you mentioned that your dad was trading equities. Had he presented you with any exposure to commodities at all? Or was this pretty new for you?
For me, I was like, I want to be a trader. Like, he's a trader. I get that. He's competitive. It's lucrative. He went from making no money to making money as a trade once he got into Wall Street and things like that. So I was attracted to that. I knew that it put me through college, and I was like, this seems like a good way for me to make a living. And he was very much, like, look, we got to get you a job on a trading desk. I really don't want you working in a back office. I really don't want you doing, middle office work. You will find somebody that needs a coffee guy on the trading desk, though. So that's what I did, and I went through headhunters and this and that, and I finally got Sumitomo to hire me. And it was a great spot to work. It was a great first job out. They gave you a lot of responsibility, et cetera, et cetera. I worked for a great mentor, a guy named John Spallanzani, who now works for Lynch. Who's
Merrill Lynch?
No, Lynch, the renowned investor. Yeah, Peter Lynch. Yeah, he works he works for his group. So I learned a lot from him about the basis. It's a great market to learn because you learn the basics of the money markets, of funding things, of the cost of carry of things, and you learn interest rates, and you learn how interest rates morph out the calendar, and that there's interest rate swaps that go on. So you kind of learn a lot about the backbones of the business kind of thing.
Do I remember correctly? Did you also go to Switzerland during this time?
Yeah, I went to the UBS Zurich. I worked in the head office for 6 months there.
And how old were you when you did that?
27.
What was that experience like for you?
It was amazing. I was really, I always wanted, I had two of my best friends. One of them moved to Paris to work for Turner Broadcasting. And I was like, man, what a good hookup that is. You know, he just went to Paris and spent time over there. And then literally it was probably less than a year later that my manager was like, would you consider spending some time in the Zurich office? You're doing a great job here. We trust you. You know, we're going to promote you to vice president and go over there. We need help on the metals desk. And I was like, are you kidding me? I was like, I'll leave in an hour. So I went over there and spent 6 months and it was just an amazing experience. It's cool to be in the middle time zone trading, right? With Tokyo in front of you and New York behind you. You know, you get to see, you know, both markets and who's a buyer or seller in Tokyo and who's a buyer or seller in New York, you know, and you kind of pick that up and figure out there's times that you can play them off of each other and make money. So that was a cool perspective. And then it was back to New York, living in Greenwich Village, working at 85 Broad Street for 6 years with my head down at Goldman Sachs. And you don't have time to do much else when you're there. I met my wife there.
How do you have time to meet your wife?
She worked at Goldman Sachs.
Oh, there you
Yeah,
go.
yeah. That's what it
Good
is. Yeah. She worked at Goldman Sachs as an accountant, and which is like in the basically where trading desk accountants, you know what I mean, that go over your P&L. And so that's how I met her. She got assigned to our P&L. We became friends.
And you did really well at Goldman Sachs investing in tech stocks. And this is a break in the journey, right?
Yeah, well, so I was on the commodity desk, but I'm a huge music fan, right? And this is around the time when you could first go on Amazon and order, the
CD.
almonds at the Fillmore, and they would send the CD to your house. And I'm literally going to the guys on the trading desk. I'm like, are you guys doing this? Like, I just got like 6 sick records sent. I just downloaded them onto my thing. I'm listening to. So it's like, what companies do I buy? You know, and so I invested in, in Amazon and in a couple of other companies and had a great run. And that's kind of what gave me the confidence to leave Goldman Sachs when they went public. Because for me, it was kind of always about freedom. I knew that I was pretty much owned by them for 24 hours a day. You know what I mean? And that gets uncomfortable sometimes, and was uncomfortable for me, and I knew that I enjoyed the money. I enjoyed the trading job and things like that, but I never felt like it was my final destination. I never felt like this was a place I'm going to be forever. And so when I got the opportunity, I went out on my own and walked into a frying pan in the face. Sat down in March of 2000 with the NASDAQ at 5K, about to get halved. And then commodities went on a 10-year super cycle after I left. It was the idea that I was going to go trade these stocks that I was investing in, and it was going to be NASDAQ 20K, and I was going to retire in 3 years. You know what I mean? And once you start doing that extrapolation, you really lose sight of things, and that's why I call it kind of walking into a professional frying pan.
I'm interested if you could go into the details a little bit about when you say, I had the opportunity to kind of go out on my own. So you had the financial resources to do it.
That was it.
And what did the steps of that process look like for you?
So, it was after Goldman Sachs went public, my wife and I were both there for that. And so we got handed a safety net, right? Like something that we earned when they went public. So on top of that, and having several good years investing in tech stocks because of my love for music, and I just looked at this pile and I was like, all right, I'm good for a little bit, and I can just figure out what else I want to do. And that's when there was nothing. Day trading was a huge craze, right? Like there were day traders coming in from everywhere. There were all these platforms being built so that they could house day traders. And I started off with, I put in money myself. We had 2 investors that were professionals on Wall Street that wanted exposure to this day trading game. And when I said that I was willing to, dive right into that, and we could start a company, and I'll use some of your capital, and we'll hire some other traders, they were all about that. They were into it, and we started a group called Machine Trading. We just kind of made it up. We rented space in a day trader's office and used their pipes to access the markets, paid them commission, and kind of figured out a day-to-day process of how we were going to look at the world. Right, and it was really very much like figuring out how to play a video game back then. And it was wild because the most successful trader in the room was a kid that went to NYU at the time, was a student at NYU at the time. And he was also a video game guru, really smart kid named Bob. And he would come in every day off his bicycle, trade the opens in the markets, trade for 3-4 hours, and then go to NYU to class, and then come back and sit down at the trading desk and trade the last 2 hours of the day or whatever it was. And I sat down there, and this kid's making like somewhere between $5,000 and $25,000 a day trading. out of thin air, going home flat. And I'm like, there's some kind of magic to this, you know what I mean? And it was part of it was the bull market, right? Part of it was like, if some of the, if like a stock like SDLI, or that's like one of the big names that was back then in the tech bubble. And it's like, if SDLI has a $25 range in a day and you can't make 10 points on a couple of hundred shares, you're not paying attention. You know what I mean? Like, this is really happening right in front of you. And so you had to get in there and get your hands dirty, but you realized that when you did and took some risk, it was panning out. So that's typical bull market, right? Everybody thinks they're a genius. I thought I was such a genius, I didn't need Goldman Sachs anymore, right? So there was my lesson on the look back,
How long was it between when you stepped out on your own and the bubble burst?
I sat down in March of 2000. That was the high of the NASDAQ at 5K, and it got halved over the next 6 months from there.
What was that like mentally?
It was insane. The dot-com bust, it was hairy. It was really freaking hairy.
Did you feel like you made the wrong decision?
No, because I was really high on the freedom. After you work for Goldman Sachs for 6 years, which is essentially, we used to call it, there were no trading days. The days were only the baskets to report your P&L along the way. What you worked for was the market is open on Sunday night in Tokyo and it closes on Friday afternoon in New York. And you're responsible for everything in between. You're the gold dealer at Goldman Sachs, so anytime anybody has to trade gold, it comes through you. Okay, so the prop guy wants to buy 500 lots of gold futures. Okay, you're filled here and I manage the risk out of my book. Now now you say, I'm a little bit short here, so you called the sales desk and you said, you want to get some producers to sell me some gold here, please? And they make calls, blah, blah, blah. Hey, you want to make a price on 25,000 ounces of gold? Okay, you bought them, like just being an inter-dealer broker, or inter-broker dealer, whatever the right word is, I forget. And it was a really rewarding experience, but it was full time. It was complicated. It was high risk. It was constant. It would be like I would go out there, my mom and dad would come into the city for dinner to take me out to dinner, and somebody would call me and I'd be like, oh, gotta go home, like leave. You know what I mean? Like, Lloyd Blankfein is about to trade, I don't know, 500,000 ounces of gold, so I have to be sitting at home on my phone and my pad next to me, and so that was really hard. And so the freedom that you feel when you relieve yourself of that is like, oh my God.
It's interesting because when you look back on that time, this is not a time when everybody had Wi-Fi in their house. At home you were lucky if you had
Wi-Fi, man.
dial-up. So you actually physically had to go back home. You weren't working from home placing trades.
No. It was like, I went back home, like not even to trade on a computer, but just to go back home and concentrate. I would get my yellow legal pad out. I would take orders from guys at the shop just to see what they needed to do net. And so I had an order now. Like, these guys are buyers, so I have to buy whatever, 600-700. They would always talk in futures contracts. There you convert it. Okay, so I need to buy 600,000 ounces of gold tonight. Get on the phone with Tokyo. Hey, make me a price on this. And kind of bob your way around. Get a fill. Call them up. Say you're done here. And then they'd hand you a stop loss.
Right.
And then you'd say, oh, what if I got to get these guys out? And the thing that you learn about that's really cool, Turek, is that you learn how to provide liquidity. Right. So the kind of thing is, like, when you're the dealer at Goldman Sachs, you can't have a big position on your own. You have to be able to you have to be willing to go at any moment from super long to super short. So everything is just kind of like you staying alive, when you're in that middle of the day swings and things. So
a lot of stress associated with it as well.
Oh yeah, a lot of stress.
So you're out on your own. You get hit in the face with that frying pan. It's not working out, and it's your first entrepreneurial venture. And most entrepreneurs, their first venture, is a learning experience.
Yeah.
So where did you go from there?
So then I went to the sell side in equities. I went down to the floor of the stock exchange. Well, first I worked at a place called Burlington Capital for a cup of coffee because it was a Cornell graduate, and the guy was like, look, you want to sit here and use my phone? We'll pay you a draw or whatever if you get if you get some orders in, great. And so I had my phone, a turret, and no customers to start off. And I dug into my my Rolodex, and I'm like, okay, who's where, who's doing what, and found some guys that could trade stocks with me.
Now, did you actually have a Rolodex, like a real
physical Rolodex? Yes, I did. I did have a physical Rolodex.
What is a Rolodex?
Yeah, right, exactly. What is a Rolodex? But it was the cool part was digging into my Cornell network and finding people on the street that could pay me. So I'd find a buddy of mine works at SAC, and he's an execution guy. So he and I are now about to become best friends. And I have another friend that's at a big mutual fund in California, and now he and I become best friends. And all of a sudden, he lobs a million share order over the system, and I'm like, so and I say that, I guess I skipped it. You're fighting for scraps from these guys at the start, and you're getting orders for 5,000 shares to get started, and 25,000, and getting a 3-cent commission, and you get a share of that, and you're like, man, I got to do a lot of this to make a living. And then all of a sudden, you make some connections, and some guys trust you, and some guys with real flow trust you, and that's why I say. And then all of a sudden, the million share order comes over. What that is a guy saying, I trust you. I have a lot of shit to do. Do a good job for this for me. Buy me 1 million shares of this, right? And so there's pressure there too. You know what I mean? Because it was always like, okay, we bought 200,000. It's getting away from you, And then you're all of a sudden you're in a fight with the guy because he wants to know, why is it getting away from me? You telling everybody I'm a buyer? What do you do? Cancel the order, And you have this back and forth with one of your good friends, but he's like, dude, you can't mess with me. You know what I mean? And things like that would happen. So you're like, I'm not messing with you, dude. The S&P is rallying. I just can't buy all this stock. So that's a battle. That's a battle. But it's a fun job. That's institutional sales trading.
And so you started building up a book.
Yeah, build up a book. More guys here. Learn that he's out there. Go out to dinner with these guys. Oh, you can pay me too. You have a hedge fund. Things like that. So it was literally, my premise was always like, look, if I can help you make money, will you pay me? And my way of helping them make money was providing my level of analysis on the markets, and then providing them all the real-time color that you can.
Now, at this point, are you still at Burlington, or do you split out and do
So
your own
I got
shop?
hired to the floor of the stock exchange to work for a direct access broker, which was a friend of my old boss at Goldman Sachs. Quite honestly, it was like, all right, go. You can probably get a spot down there if you want. So I started with them, and that's where I really built up a significant book. Like the New York Stock Exchange is cool. Certain guys need floor brokers. They need it for the information. They need it to trade listed stocks. You got to have guys down there. It's not the NASDAQ that's just going in the wood chipper. So you had to have a contact. And so being a rep from the floor was kind of like being a Cadillac salesman. You're like, hey, I'm down here if you need to do business in a professional way on the stock exchange. We're direct access brokers, and we'll take good care of you. And the people trust you, and you get some more orders, and you build businesses, and you make clients and lose clients when, for different reasons. But yeah, the book built, and eventually, Tarek, I built a book. We had a total of me plus 3 other sales traders, and we could do anywhere between $10 and $15 million in commission business in a year.
Wow.
Yeah.
Incredible.
From zero.
Was those hours, were they easier or slower than
It was
Goldman
bell to
Sachs
bell.
because
It was
of
bell to bell, which was cool. Well,
Yeah.
it was kind of the thing where you say, bell to bell is my job, and going out at night is my career.
Yeah.
You
Making the relationships.
Yeah, because that's really important.
Yeah.
And I mean, any bank trader job on the street, you have a lot of relationships with people out there that you need to have good relationships with, because you need help.
And that dovetailed well with what you enjoy too, because
Yeah.
you're just saying you like going to concerts and going out,
Exactly.
live events,
Yeah.
sporting events, that kind of thing.
Yeah, so you had to say, all right, I'm going to become, an institutional equity broker. And so then everything changed, man. Then as electronics crept in, things got more competitive. I took my book and went to a couple of different shops. I was at the 4 of us that I mentioned in my group were at Dahlman Rose for a good run, like 5 years. And I would still be there doing that job today if I could. It was a total shark tank of type A traders, men and women, but great salesmen that could get orders on the desk. We were busy all day long. You know what I mean? And you go out at night after that and people would be like, dead day today, huh? And you'd be like, yeah, dead. I traded 9 million shares of stock today on our desk. Sorry, buddy. You know what I mean? So that's when you realize you're like, hey, we're making an impact, right? Let's keep this ball rolling. I had super resourceful people working with me. I had a great assistant plus 2 other sales traders, and as a group, we had a lot of relationships and got a lot of big business on the desk. So it was flourishing. And then, like I said, as what happened with that job was Cowen bought Dahlman Rose, and Cowen hired all the bankers and analysts and told all of the sales traders that were making 7 figures, hey, we'll give you guys $100,000 salary plus bonus. And all of the sales traders went, yeah, okay, see ya, right? So now all of the good sales traders went to all different shops all over the street. So that's when I started what I call the agonizing pickup basketball phase of my career, where I had these precious relationships of some of the biggest commission-paying accounts on Wall Street. And I'd go and take a job at a Canadian bank and say, hey, I think I can do XYZ $1 million of business. If you pay me this commission, I can do that here. And I do what I expected to do plus 20%. And at the end of the year, they would say, okay, but for next year, we're going to cut your payout down. So you're going to make a little bit less because you're fine, you're doing more, making more money. We need a little more margin for the firm. And I'd be like, I was about to ask for a raise. I said I could do what, $2 million, $3 million in business when I came in here. I just did 4.5. And you're going to tell me that I get less of that? What are you talking about? You know what I mean? And it would just inevitably become well, we're cutting your payout. And I'd be like, you don't understand. I'm not going to come to work. The business will not go on your desk. It comes with me. They trade with me. They don't trade with your shop. And so 3 years in a row, I went to 3 different shops. And at the end of it, at the third one, when I decided that I was not going to leave this place and go to another one, I pulled my closest mentors in the business together, and I was like, look, I'm not doing this anymore. I'm going to try to go out on my own. I'm going to make the note that I write to people in the morning my product. What was cool about that was that as a sales trader, you need a calling card, and I was pretty good at writing a morning note. Here, hey, this is just like a play-by-play. This is what I see. This is what went on in Europe. These things are doing this technically. I see this and this happening.
And this is around 2015, 2016?
This was in the early 2000s. This is probably This is probably 05 to 15.
Okay.
Right before that whole run that I just described there is probably 05 to 15 from the time I folded up the day trading company and moved on to institutional.
But the time that you decided to kind of go out on your own was around 2015, 2016.
Yeah,
that's when
with the newsletter. Yeah, and that was because I had, as a sales trader, you're writing this newsletter and all the other sales traders on the desk are like, hey, if you want on Tony's note, he writes a really good note, and we'll put you on the distribution of it and you'll get it every morning. And so everybody was like, oh yeah, put me on that. And just organically, I never advertised it at all. Just from people asking me, I had the last email blast list I had 1,216 people on the note.
Okay.
So it was going to a huge audience, all professionals on Wall Street. And I went to my closest mentors, the guys that I've been looking for guidance from for years. And I was like, look, I think I can go out on my own. Jared Dillian just did this. And he just started a newsletter in 2008. And it's going well for him. And I think that I can do that. And they were like, dude, you can do this. You know how to do this. And one of the smartest guys was like, just start doing it. Just start doing it. You'll see how much better you get at this. You need practice at that. That's a different thing. You're going to start your business. It's going to become its own baby, and you're going to get better at it. And now I wake up in the morning, and the newsletters write themselves.
So that transition, how long did it take for you to get your subscriber base set up? Because you're going out and you're like, okay, now I have no income.
Right, exactly. You have no income. So what am I going to do? I'm going to go out to my base, and I'm going to say, look, I'm about to start a newsletter. I'm building the sign-up pipes back here. I decided to charge $480 for the first iteration of the newsletter.
Annually?
Yeah, because I remember Jared Dillian at the time was charging $600, and I was like, all right, I'm not as good as him, so I have to be cheaper. I don't have any credibility whatsoever, so I got to have guys that are just willing to say, okay, we'll buy this. And so I started off with 60 clients at $480. I had $30,000 or $40,000 of revenue, and just figured out how to start marketing it. And then I was saved, quite honestly, by Doomberg. We overlapped at a conference that we went to. It was in his professional iteration before Doomberg.
Okay.
Right? And I have a client that was like, hey, you should meet this guy. He's a really smart businessman. He's kind of getting into the markets a little bit. He's looking at Tesla. He's this and that. But just talk to him about your business. I told him that you write a really good note and have a good budding business. So I did a conference call the first time I met Doomberg, and I told him everything about my business and what I was doing. And he was like, okay, you're doing this all wrong. You're totally backwards here. This is totally, this website here, garbage. You're doing this completely wrong. What we're going to do is we're we're going to point you to this developer. We're going to build you a website. We're gonna be more transactional, this and that, and it's going to help you. Believe me, right? Sure enough, I did that, and it moved the needle. Like people were like, "Oh, okay, I understand what he does. Here's the proposition. This is how I pay. Smooth as silk. Okay, cool. Give it a shot." So that's how I got on the map, and he helped develop it. And then I guess, quite honestly, from being on Real Vision,
That's
and
the first time I saw you
Yeah.
on Real Vision.
yeah, that was so. It was pretty cool how I got on that. I wrote a note about Real Vision. In my note, I was like, so there's this financial television service out there called Real Vision. I think it's pretty cool because they're democratizing financial information and analysis, and it's kind of the way I'm thinking. Like I just left this old model, the old sales trading model, where you have this huge research department that you pay huge salaries, and you have these sales traders that you pay nothing, but they survive because they're killers working on commission. And the sales traders sell the research to the execution traders and their portfolio managers and try to get paid from them. And I was seeing some of the things that were going on in that market and saying, this is horrible. This is not going to last. They're going to get these people killed, and it's just not going to last. There's room for people to do things better and give better guidance. And that helped me have a kind of an attitude and an angle every day on writing. And then from making some good calls on Real Vision, you just start to build up the book, and people are like, "Oh, he was right."
They find you on Real Vision, and then you're on Twitter. So the FinTwit community starts kind of
Lifting you up a little. Yeah, for sure.
Lifting you up.
Yeah.
And you fast forward to today, and you had a graphic up on the board where you have now subscribers in 40 different countries.
40 countries.
All over the United States. Thousands of people are following you. Now you're running your own conference.
Yeah.
It's a phenomenal journey.
Thank you, Tarek. I'm really blessed to have it, and it's a testament to the people that I've had around me that have believed in me and given me the confidence to do new things and try different things with my newsletter and get better at it. JJ was another guy that, like, from the beginning, I learned so much from and was stewarding me on my writing, because I like work when as a trader you want consistency from whatever source you're using. You want consistency, and you want the same packaging every day, right? You want to read somebody's thoughts in the same form and be like, okay, I'm getting to know this guy and how he thinks. And so when you can become that for somebody and become a voice in the quiver of voices that they listen to, you don't realize how much value you're adding. You know what I mean? And you don't realize it until they tell you. And that's when you get confidence to be like, oh, okay, we're doing this right here. Okay, I got to write more about this. I got to take the political bullshit out of my writing because nobody likes that, and they cancel when I talk about when they talk about what a jerk this is or whatever it is. You know what I mean? But then when now that my business has grown, I've lost that urge to be a political live wire, right? And my business has grown, and I've learned that, like, no, dude, that's bad for business. So keep it out of the business. And then you see the business grow, and you're like, oh, that's really a good idea. That makes a lot of sense.
Yeah, and I want to get into your process a little bit so that people listening can kind of understand what type of material you're providing, when you're providing it, and how it helps the people that sign up for the newsletter. Before we get into that, I want to talk a little bit about people who are listening that want to get into understanding and learning about trading markets and how difficult that process is. And I want to talk about it a little bit from my own journey, because my degree is in electrical engineering. I grew up poor. I never had a financial background at all. And now I'm in a metals business, and the learning curve was really steep.
Yeah.
And so the fastest way to close the gap on the learning curve was to sign up for newsletters.
Yeah.
Because you're hearing from the best and the brightest in the business, not only what they think, but why they think it,
Yeah.
and how they arrive at those conclusions. And then you start adopting and absorbing a lot of that thinking and applying it to your own personal trading.
Yeah.
So I'm a big advocate for newsletters. We sign up for a lot of research at the company, including yours.
Thank you.
And I'd like you to kind of get into your process and how you send out that information.
Yeah, so I start off, from a trading perspective, I start off from the position of I watch the year-to-date sector race like my life depends on it. right? So I watch what sectors are performing because my goal is to get my subscribers and clients into those sectors to be in the winners at the end of the year. And then we'll decide what we want to do for next year. So, for example, last year gold miners were up 150%. We bought them along the way on whatever dip it was that I got us into the trade on, and we've been managing the risk ever since. So that contributes to what I do, where I run what I call a view matrix of directional percentage point trading, right? I don't manage a portfolio because I don't size trades for people. I just say, buy this. If it goes up 10%, that's plus 10%, 10 points. So now I've got literally a living portfolio in my view matrix of trades that I've gotten into and are either making or losing money. And so we accumulate the percentage points and just put on as many winning trades and calculate how far they go. But the process behind finding that is I'm a close junkie. So at the end of every week, of every month, and every quarter, I look at the performance of every sector and every security in my matrix. And I see which ones are performing. And then I do a technical overlay and say, okay, this is performing, but it's, up in a straight line. Or, hey, this just started performing and it's starting to attack moving average resistance. That's more interesting, right? Like that looks like a trade that's breaking out, And so I'm learning how to trade breakouts in these sectors to get myself and show people how to get into them.
Yeah, and you said something really important is you're using the word sector, and what you're saying is you're not a stock picker insofar as I'm looking at Amazon or Tesla or one of these companies. You're looking at ETFs in broad markets and saying this market is set to outperform this other market. For these reasons, XYZ reasons.
Yeah, so the reason I like sector ETFs is because they kind of can trade on a narrative more, and you avoid single stock blow-up risk. Now, you also may miss out on single stock performance, but it's more important for me to kind of squash that volatility down, and not have to get buried in a bad earnings report because one company, one CEO made one bad decision or whatever it was, and this company reported a stinkburger quarter and it's down 18%. And now what the hell do I do? You know what I mean? It's like you either put your call on the line and you say I'm buying more, or you just got to get out. And I just hated that about single stock trading, whereas the sector trading smoothed out that risk, right? So the sector might be down. Say the biggest stock in a sector is down 15% on an earnings blow up, the sector is maybe down 5 or something like that. So you have a little bit of the smooth volatility out, and then you can kind of establish a character. That sector becomes a character. It becomes one of the characters that you follow, and I run a really tight book in terms of line items. Like I follow like maybe 40 or 50 securities, and I don't like to have more than 4 or 5 or 6 positions on at once.
Wow.
Yeah, because I'm more, I'm a trader. Like I'm like a Druckenmiller type trader. Like I put all my eggs in one basket. I bet on the basket, and then I watch the basket really carefully, and I make sure that if it's going against me, that I get out.
Do you put your own money in this, or do you try to stay out so that you can,
So yeah,
Remain.
the view matrix is very much a mirror image of my trading account. Right. Oh. So the positions that I have it's like this. If it's on the view matrix, it's definitely in my trading account.
Yeah.
It may not be at the exact same time exactly, or it may not be in the same form, but it's in my trading account. And then there are also other things in my trading account. So I have like 4 or 5 or 6 that I manage on here, and I probably real-time trade like 10 positions or something like that at once.
So would you say it's fair to say that because you hold such a small amount of sectors or securities, that's more volatile, but you decrease that volatility by using the sector ETFs rather than specific?
A little bit. Well, so what I do, the reason I like to just have a finite set of securities is that I can get to know them better, and I'm a big price action guy. So I like to watch markets like all day long. You know what I mean? Like I send out my note in the morning, and then I sit there and stare at the tape all day, and try to figure out
listening to music.
Yeah, exactly. Listening to music and trying to figure out what's going on, So, I guess the most important part of it, though, is stocks and sectors land on your radar across a monthly screen, weekly. When they land on your radar on a weekly, monthly screen, now you're starting to talk about a trade that's happening. You know what I mean? Like when it's at the top of the leaderboard last week, and then it's at the top of the leaderboard at the end of the month. You have to give that credit as a trader, and you have to say, okay, if I want to make some money, like let's get into that and figure out how to manage the risk, or at least if it's soaring away on a rope, let's put a bid below the market and see if we can get in the next time it pulls back. And that's what I happen to be very good at, is saying, okay, here's our target. We're not going to go blast away at it right now. We're going to sit in the weeds and wait till we get a kill shot.
Yep.
And that's what my subscribers have found really, really valuable, right? I think the sort of uneducated rookie investor probably puts trades on because of what they think. Oh, I believe this. And it's like, that's not even how I trade. I trade by what the market is doing, or what it's actually doing. You know what I think about markets? Nothing.
Right, and they tend to overtrade.
Yeah, exactly.
When you get into the markets,
Yeah.
your time horizon is a little bit different. And for you, you're trading themes. You're
Yeah.
trading big, major directions. And, something that you've said in the past is, strength begets strength.
Yeah.
And so we've seen, for example, like gold and the commodities breaking out.
Yep.
And this is the beginning, the early phases of a much bigger move. So don't get scared by the fact that it's up, 100%,
Yeah.
because that is communicating that there is an underlying trend that has now initiated.
Something's going on, man, and your instinct as like a young person is to see something move far in a direction and be like, oh, I want to fade that. You know what I mean? And that would have been like young TG. Mm-hmm. And now I'm like, how do I get on that train?
Right.
Right? Where do I get on that train? Because I know that thing's going and I want to be in that.
And the train stops for you are pullbacks.
Yeah. Yeah, we don't ever just, unless I'm buying a breakout, above a moving average, above a trend line, everything is a bid. We just got into the aerospace and defense sector, which has been up a straight line. But everybody in my group, because I said I was bullish, they're like, how are we going to get in? When are we going to get into this? I'm like, all right, we're going to be at 225 and we're going to see what we're going to do about it. Let's give it some time, and sure enough, we get hit at 225 and it's 240 bid. Mm-hmm. But that's been my skill of being able to get in, wait for the pullback, get in, so at my price, and then know what my risk is. Close below the 50-day moving average, I'm out. So things like that.
I've definitely hit a lot of those young trader issues. And one thing that Tark has shown me recently that he's kind of mentoring me on is technical analysis. Are you using a lot of technical analysis in that?
I'm a pattern recognition guy. As you can tell, I'm not a brain surgeon at all. You know what I mean? I was not a good student. I'm not very smart, but I recognize patterns and I'm very diligent about markets. It's really about the patience of getting into the position and being diligent about managing it, and about having a process to get in and to get out. But it was really, like I said, like the young Tony Greer would read the Wall Street Journal and be done with it and say, okay, the dollar's going to go higher. I'm going to buy dollars. Bearish stocks. I'm going to sell the S&P. I'm bullish cocoa. I'm going to buy some cocoa. And that, I realized after losing enough money that I had total disregard for what the market was saying. Mm-hmm. You know what I mean? And I was like, I'm trading because I think I'm freaking smart. I know that I'm not smart, so that's why I'm losing money. You know what I mean? And then when you realize that the knuckle dragger can figure out how to get on a trend and put a stop below the market and let the market do the work. And sometimes, what's interesting also, Tarek, is that people ask me, what's your time frame? And I'm like, man, I'm a trader, so anything from 2 seconds to 20 years works for me. And I don't really choose my time frames. I choose my risk reward, right? So I choose risk reward. I get into a position, and then I leave a trailing stop behind it. And 1 out of every 10 positions is one that trends and trends and trends and trends.
And the markets are fractal.
Yeah.
So it's you can choose your own time horizon and how you want to get in and out. But ultimately, what I have found is that the best traders follow trends for long periods of time. It's the Druckenmiller thesis of, put all your money in that basket and watch that basket as it goes up.
Yeah. And so as it goes up, I'm raising my stop, raising my stop, raising my stop. Just pick a moving average that it seems to be staying above during this trend. And every single day, move it up right below that moving average. That's where your stop is. And next thing you know, sometimes you're in a trade for a year, up 65%. That works for me. And when do I get out of it? When my stop gets triggered, when it breaks down below the moving average. So every one of my trades is a pullback from a high water mark. And I'm okay with that because it lets me stay in longer and it gives me a real time to exit. And the beauty about the markets after I exit is that I can always buy it back. That's what people have a lot of paralysis about, right? They're like, oh God, what if I sell this? And you're like, was the market closed? You go buy back the next day. You know what I mean? Like, why are you falling in love with this thing? It's just a trade.
Right.
So that's a little bit of the perspective.
And you stay agnostic too. You don't care if Bitcoin is going up. You don't care if it's going down. You don't care if it's going to change the world. You don't care if it's fake, digital money. It is following the charts.
It's another ticker. Yeah,
It's another
It's
ticker.
just another ticker.
Same with gold. Same with oil and energy stocks. It doesn't matter.
No, but what's cool is that, Turek, obviously, let's go into your wheelhouse for a moment here. Trades like gold are the trades that give you, that is a trending bull market. And think about the ultimate, unbelievable opportunities that we've been given in gold. We had a double top at 1900, and then we broke above that. And we went into that long. And I told my customers, like, this is where you supersize your gold position. Like 2,000 bid, buy 2,100s and buy 2,200s because this is going to break. Like this thing is stopped here twice. And then it goes to 4K. And then it's 3,500 bid at 4,000, 3,500 bid at 4,000, and you're still upsized and it breaks up through 4,000 again. And that's another buy. Like you can add to your position on that too. And then you're getting a bigger position in a market that's going up and you just have a trailing stop behind it.
Same with silver. I was having a lot of conversations with investors who were, silver was at around $40, $44, and it had a very nice move. And they were saying, should we get into silver at this juncture? And my response was, let's see what it does at 50, because 50 was the number, right?
Yeah.
It was the high in the 1980s.
Psychological level,
It was a huge psychological level also in 2011.
Yep.
Let's see what happens at 50. And if it breaks above 50, then you're going to have confirmation that this breakout is true and it's real. And so I'd rather give up the $6 until we get that confirmation
Totally.
before we go heavy long and see what it does. And sure enough, it broke 50 and it moonshotted to 120.
Right. And that's where you get confidence as a trader when you talk to non-traders and you say, look, this breakout here, this is where you upsize. And they say, what if it goes down from there after you upsize? And you say, you lose money. Right. You lose more money. You know what I mean? But this is the big boy stuff. This is what we're talking about. Take the risk to lose more money, to believe in the trend that it's going, you know what I mean? Like
it's all probability based.
Yeah,
So you're trying to push the house into your favor as much as you can. Nobody is going to know with 100% certainty that, silver's going to break above 50 and it's 100% going to go up from there. Nobody knows that. But if it means that the likelihood is 60-40, then I'm already playing, with the odds stacked in my favor.
Yeah. And if you remember that in markets, you don't get what you want. You get what you get. You get what they give you. You get what they do. And if you realize that not every trade has to be a freaking Picasso, and sometimes trades are just little 7% winners, but it just didn't go anywhere and it's just not right to be in anymore, then that's just all that was. And you don't have to say, no, but I'm going to hold on to this forever because I wanted 70% out of this. It's like, well, the market gave you 7, so move on.
Expound on the behavioral psychology, because you've lived through so many markets, so many corrections, so many eras of exuberance, like during the tech bubble, et cetera, and you see how people's psychology impacts the allocation of money.
Yeah. So I put sentiment into a really important slot of my toolkit. Is knowing what sentiment is in something that you're in is absolutely necessary. I'm trying to think of what I could add to the psychology of it. It's definitely something where you want there to be naysayers of your trade, right? You want there to be a lot of people to think that that's wrong, because then they're going to bet against you. And if you're right, they're just going to have to stop out, and that's going to create buying. And if they're right, then you're going to have to stop out. And that's the fight, right? That's the competition in the markets. But when you start, when you're in something, like I said, it's great to have people saying, that's not going to work. I'm bearish that. When you're in something and everybody's like, I'm in it too. You're bullish, you're bullish, you're bullish, you're bullish. Everybody's bullish here. Okay, I'm out. Literally, it's become something like that. It's like, if I'm not out, I'm cutting my position size. And now I may not just take this small sample size, but I will go check every sentiment indicator out there and make 15 phone calls. What do you guys think about this? What do you think about this? Doom, what's the story? What do you think of this? JD, what's the story? What do you think of this? And if everybody's like, yeah, we're bullish, man, then I'm out. Then it's like, because groupthink means no one is thinking. So that's when the trade is over. And God forbid everybody's bullish on a trade that gaps open higher. That's like an automatic out for me. That's where, I don't know if you listened to JJ's speech yesterday, but that's where it's where I will always say, that's enough.
Yep.
That's enough profit. Because if you're long a trade and kind of, if you're in a trade and babysitting it and it's going your way and it's not going fast and all of a sudden it lurches your way, that's a sale for the guy that's long. You just did all the trouble, you did all the work, and you got a quick payout of this percent. Now, something moves, an outsized move in a short period of time, what's the odds of another one happening? Smaller, right? So that's where it's, for me, it's like, okay, that was the trade, that's enough. And then you take that pile of money and you move on to the next one.
So let's give us a little 1-minute snapshot into your view of the market going into 2026.
I'm going with, it's really important to me that the stocks that came out of Liberation Day, the tariff, story, the 1,000-point down and back. And we came out of that with leadership in obvious metals and mining, right? Gold miners, industrial miners, uranium miners. But there were also cyclical sectors that performed well last year, solar stocks, semiconductors, things like that. So that's a pretty balanced, broad, bullish view of those sectors. And then we've got AI, this big, behemoth, this 800-pound gorilla that we've just grown, that's probably overbuilt, that's probably in a bubble, if not definitely in a bubble. And now all of a sudden it stopped performing. So what happened is you've got natural resources have gone bid, they're breaking out. AI and the semiconductor trade is hanging in but not performing as well. And you've got other sectors of technology and Mag 7 going down. So it feels like we're set up for another year that was very much like 22 that I called the Great Rotation, which is like everybody's pitch. That was when headline inflation was hitting the markets and bonds were selling off hard, rates were higher. That's why everybody sold their tech, their growth stocks, and bought value stocks, right? And commodities were up huge that year. So it feels like we're going to have a little bit of that, right? It feels like this AI thing, this AI engine that stopped going to the sky is all of a sudden sideways and vulnerable now. Other sectors of tech are getting hit, and all of that money is going right into the resources markets.
Do you think that AI trade is because the industry isn't going to go as far as people think, or is it just way too expensive for where it is right now?
It just seems like the build out has gotten enormous, right? They've spent so much money on this infrastructure. They don't have a great revenue generating plan, or
the CapEx is crazy.
Crazy, right? So that's what the .com bubble looked like.
Yeah.
It seems pretty ring fenced though. Like it seems to me like when the AI bubble unwinds, I don't necessarily think that the stock market crashes. You know
a
what I
lot
mean?
like the .com bubble to a certain extent,
Yeah,
correct?
yeah. But everything went down in the .com bubble, and I really think that there were no bullish commodity markets during the .com bubble. Is the reality. You know what I mean? That kind of happened a little bit later. That kind of came out of it, but it was everything. The S&P and the Nasdaq were getting hammered during that breakdown, whereas this. Now we're kind of spinning wheels just below S&P 7K, but now all of a sudden you've got oil services stocks and E&P performing, and they're right in there with gold miners, and uranium's not going away, and basic materials and copper is coming alive, and things like that, right? So it's like for me as a commodity-based trader, like that's the stuff that I'm going into, no questions asked, right? The commodities are going, they're breaking out. I've got a chance to get into these names early, so it feels like a good year for natural resources, but I think it can continue. It feels like it's something that can be more lasting. You know what else, Tarek? I feel like we're at the end of I feel like we're close to the end of technological advancement in certain ways. Meaning now technology is not going to stop, but the tech markets, we've got this AI thing here that's not going to go away. It's going to change, how everything operates. And what's the next thing? What's the next tech thing? biometrics, chip in the wrist, and it is-
Neuralink.
right, things like that. And it is my belief that humanity is going to dramatically reject that, like we rejected meta glasses. And it's just not going to be something people are going to go for. If you have a chip in your arm and you're being monitored, you've given up a good portion of your divinity as a human being, right? And you put yourself at risk of God knows what. And I think that more intelligent human beings are going to be like, I don't really care why or what. I'm not putting that thing in my wrist. I
Well,
don't,
especially after COVID.
Right.
The backlash after
How
COVID.
are they
they're
going to
second
sell?
guess.
How are they going to sell that idea that we need to monitor you via being connected to your body? And people say, yeah, okay.
You don't think that people would buy, not that the sales pitch would be, we're going to monitor you, but this Neuralink is going to make you a superhuman. And if you don't, you're going to be in poverty and you're going to be left behind. You're going to be less intelligent. Do you think people would buy that story?
I do think that there are probably people that might buy that story, and those are probably people that don't have God in their life. You know,
Amen.
yeah, you know. So I don't know who else is going to participate with them with their Neuralink thing. You know what I mean? So I don't know. I don't really have I can't say it's that bulletproof of a view. You know what I mean? It's just a feeling that I'm getting from all the regime change that we're experiencing. You know, as we can see around the world politically and markets and things like that. It's all, you know, everything is changing. We've reached a lot of extremes.
Yeah.
Right. From the time the door flew off the Boeing plane, I wrote a blog post that day, and I wrote DEI is dead. That was 1 year before the colleges started canceling all their DEI plans, right? And it was like, no, this is the end of the line. People aren't going to risk safety on airplanes so that we can hire somebody that doesn't deserve the job because of their skin color. People just aren't going to accept that. It's not going to be okay for people to die, you know? And so a year later, the whole thing is shut down. And you just have to see that, you just have to understand that signal. It's like, no, that's enough. That's the end of the line for that piece of tech or that idea. And so that's why I feel like, you know, like the meta glasses were a great example. Like, hey, Johnny Facebook can wear glasses around. It's like people are like, what?
And you can
What?
film me at any point.
Yeah,
That's
right.
weird.
Like, yeah,
It's
like
weird.
no way. I'm not doing that.
Yeah.
Like, that's dumb. Like, I'll do the iPhone. I know they're following me. I know they're filming me, whatever it is, but I'm not going that angle, you know?
Well, you and Jared Dillian have a weekly podcast that you I've been consistent with over at least the last year
Love it.
because
Yeah.
I watch a lot of those podcasts, and I would encourage anybody to listen to those so they
Thank
can
you.
hear your views and kind of understand, you know, your market expectations and such. Where can they listen, and where can they sign up for your newsletter?
Yeah, so you can listen to our podcast. The best spot is tgmacro.substack.com. That's where I send the newsletter out to. You can get that on YouTube or on anywhere on all of the platforms. Macro Dirt Podcast. That's our labor of love, man.
Macro Dirt Podcast.
Macro Dirt Podcast, yeah. And we take it very seriously, and we're having some great guests come on. And you know, I'm kind of the producer of the show, and I kind of have a schedule for Jared and I, and then I hand it off to our producers with all kinds of instructions and visuals and things like that. And I'm really pleased with the way it comes out.
Yeah, what I love about it is there's a lot of meat on the bone in
Yeah.
a short period of
Yeah.
time.
Yeah, that's
so
what
you're
we're
not
trying to
having
do.
to like sit for 3 hours and sift through a minefield of different information.
Yeah, Jared and I, we just hit a high in the podcast that we've done, just the two of us, and we're starting to get like north of 30 and 40,000 views on each one. You know,
incredible.
so
Wow.
yeah, and we do better the shorter they are, Tarek. You know what I mean? Like we put down a 21-minute one the other day, just he and I, and out of the blue got 40,000 views, and you're like. What is going on? And I'm like, JD, it's because it was 21 minutes. I'm telling you, everybody's
People are
like,
listening to it in 10
Well,
minutes.
yeah, right, exactly,
Yeah,
right.
None of Gen Z has any ability to focus at all
Right,
anymore.
exactly.
So
No.
yeah, keep it short.
That's totally it, man. That's totally it, man. I totally get that.
Well, in light of your long commodity play, we got you a parting gift.
No way.
Yeah, man. An ounce of silver.
What?
The Y'all Street silver coin.
Dude,
That's
I am
for you.
honored, Tarek.
Thank you so
That
much
is
for
awesome.
joining us, man.
Thank you so much for doing
Love
that.
your research. I encourage everybody to sign up for the TG Macro newsletter and the pod.
You're too
the
kind,
best.
man. Dude, thank you so much. I'm really grateful that you guys came and did the podcast, and this gift is over the top, and I just can't say enough about it. You guys are amazing.
Thanks so much.
Thanks so much, Tarek.
How do y'all drink this?
That's the Y'all Street.
Yeah,
Like
stopping by. You're the man.